How's it going, everyone? It's Sam. We are going to look at my entire investment portfolio, my cash position, my collectibles, every single position, and I'm going to break it all down for you. So, I've gotten a lot of requests for this recently, and I think it's because we've had some portfolios that have been up a lot. So, we're going to cover every single position. Like I said, I am going to try to do my best to show you exactly what I'm making. Now, I will say that I've had a lot of transfers happen. So I've moved accounts to different places. I recently left my employer. I've been using different brokerages and different websites. So some of the stocks transferred and they reset the cost basis. So I'm just going to show you what I'm invested in. Some of the gains are incorrect. We've actually gained better than some of the positions that they'll show us. So I'll explain that later, but we're going to break it all down. The only thing I ask is that you hit the like button, first of all. That would help out a lot. Also, maybe share it to anyone that might be interested. I'm 25 years old, so I have friends and I know other people that have much better portfolios, much more money, but I think that this is a good representation of maybe what you should be doing if you are in a similar position. I will say that everyone's a little bit different. Everyone's goals are different. So definitely it could be different than what I have, and you might still be on track. You still might be doing better than I am. But the other thing I ask too is if you want some free stocks, if you want some free money, check out the link down to WeBull in the description below. They increased their free stocks to 4 free stocks. So they ended the 3 free stocks and decided to up it. So definitely check out that link if you want it. I do like WeBull. I have them as one of my investment brokerages, and I hold money with them, a significant amount. So definitely check that out. Deposit $100, get some free stocks. It supports the channel. It gives you some free money. I appreciate it. And let's get into it. So first of all, I'm not messing around here. I'm just going to tell you exactly how much I have in my 3 main categories for assets. So I have 3 main categories you can see here, and I'll break down each of these a little bit more, but I have about $48,000 in cash, which is the majority of my money. It is a significant amount, and you might be thinking that I'm holding out because I think there's another market crash or something like that. That's not the case. It's that taxes are going to be crazy for me this year. Also, I am planning on saving up to buy a house, so I am holding on to more cash for that. It's not like I am holding out from investing. I'm still investing every week. I'm still investing a significant amount. If you followed my channel, you probably know what I'm investing. So I am not holding out. It's just that I am saving up for other things. You can see that I have about $39,000 in equities or stocks. This is broken down in a number of portfolios, too many actually. I should cut down on that. And then I have 1,300 in collectibles. So these collectibles, I'll hit that first. $1,300 are in sports cards. So if we just take a look, Logan Fisher is actually helping me with these, and I plan on doing a video on this. The 1,300 is what I've invested. We figured out it's probably worth closer to 2,000 now, just a couple months in. He invests heavily in sports cards. So if you want to check out his channel, you can definitely do that after there's a video. But right now, I have about 1,300 invested in that. And then the easy thing to clear up too is the fact that my cash is right now in checking accounts and business accounts. I'm planning on moving a majority of it into a high interest savings account. So that savings account that I'm looking at, and I have to clarify this, should pay about 3% interest. So I might make a video on that, but I plan on making some nice returns just on that 3%, and that's up to $100,000. So I might move over $30,000 or $40,000 worth and let that ride, gain some interest while I'm waiting to buy my home. So then from there, we have to look at my investments, and I will say too, I also have some debt. I have some student loan debt, which is at a very low interest rate, and I'm actually planning on holding it for a while for the fact that it is at a low interest rate. And then I also get a tax write-off, or tax deduction, I should say, for that student loan interest. So I actually pay an even lower rate when you consider the tax deduction. It's right around 3.5 to 3.6%. And I'm very glad that I've not been aggressively paying this off because I've had really good returns in the market this year. So I'm not planning on paying that off any earlier than I have to. And we're at really low interest rates right now. So let's take a look at every single position in all my portfolios. So this is the portfolio that you probably see the least of, and this is my Fidelity account. So this serves a number of purposes. First of all, it holds a couple individual positions, and this is because I had this account for a employer stock purchase plan, and you can see here I worked at Comerica Bank. You can see I have a decent amount of shares here, and I'm up about 15% on my position. Now I'm actually up more than that for the fact that we do have dividends in this account. I don't believe it accounts for dividends, and I did get an employer match of about 15%, so we're probably closer to about 30 to 35% up on the stock right now. And then I also have Planet 13. They are up about 10% since I bought in, and you might be thinking I bought in at a very high cost basis, which is $3.42. That is true, but I was investing from when they were $1.60, and then I was investing all along the way. I invested when they were up around $3.50 or $4 a share. I feel like this is a very good long-term play, and I'm still holding on to Comerica because it is down significantly on the year. I think it's going to go up from here because it is a regional bank that is very tied to interest rates. So once they start bumping up interest rates in a few years, I think the stock is going to go up pretty drastically. They have pretty good fundamentals, and they do pay a nice dividend right now. I think it's 6 or 7%. So I plan on holding them just for the dividends for now and then some appreciation later. From there, you can see that I have a 401k that I have to roll over into an IRA soon. It is just invested into some index funds here, a 500 index, a mid-cap index, and a small-cap index. You can see the current position, about $6,000 in the 500, and then $1,200 in the mid-cap and the small-cap. So I hold about $8,400 in here. Not a huge amount, but I only worked at my job for a few years. So I also have my health savings account, which is all in a total market index. We're up pretty significantly on this one, about 35%. On the 401k, this was actually transferred recently, but we were up pretty nicely in this too. So the total gain isn't shown here, but I've been investing in it for 2 years, so we have some nice gains there. I can't really show it here because it was just transferred in because my employer had switched plans. Now we have my Roth IRA. This is one that I'm pretty proud of. This is what I started investing in around the pandemic this year, and I have some really good gains. So I transferred part of this in from Vanguard, and when I did that, it reset all my cost basis on this first page. So I will show you in my funding history what we have here. So overall, we've invested about $9,000, and we have about $17,400 in here. We also had a small transfer of about $3,000. So really we're up about $5,400, not this $4,900. So overall, we do have a nice performing portfolio here. We have 16 positions, so it's a little bit high in the positions, but I think overall it's pretty good. We have the Vanguard S&P 500, so just another index. About half my money is in indexes. The other half is in individual stocks. We have Facebook as our largest holding at $1,900. We're up 54%. I think they are a very good company that has a lot of growth in front of them. They are one of the largest companies in the world that grows at their growth rate. So I was really excited to buy them at the beginning of the pandemic, and I bought some of my shares for about $150 and then bought up to about $220. So we have an average cost basis of $178. We have Tesla here, which is at about $171 average cost basis, and we have about 3.2 shares. We have a nice return of 158%. I bought them when people said that they were overpriced, so I was really excited to see them continue to go up after that. We have Foot Locker, average price of $22.50. I am not investing in them in this portfolio right now, but I am investing in them in my other portfolio that I'll show you in a second. I really like them. I think that they're going to do really well around Christmas this year. We have Berkshire Hathaway, which is just such a solid company. I bought them just because they seemed really cheap for what they were. They produce a lot of money and have a lot of cash flow. So I bought them at about $182 a share. They're up 28% right now. We have IIPR, which is up over 114% right now for us. We bought them when they're $70 a share. Now they're much more expensive. We have Qualcomm, which is the chip maker for the Apple iPhones, and they are going to produce a lot of chips for the coming years with the new iPhones coming out. They are up 110% in this portfolio. Store Capital, which is up 15%. They're one of our newer buys. So you have to realize we bought all these companies at different times in different amounts. So it's really hard to compare even to the S&P 500 because Store Capital I didn't buy until maybe a month ago, maybe 2 months ago. And a lot of these other stocks like the S&P 500, we bought 6 months ago or even longer than that. So we have Store Capital. They're a REIT, a real estate investment trust that has different tenants. They have a really high yield for the fact that they rent to a little bit lower grade tenants than a lot of other real estate investment trusts. And by that, I mean they're not like the Starbucks of the world. They're the Ashley Furnitures of the world. I always say that, but they are companies that aren't as flashy, but still are good, solid companies. We have VNQ, which is just a REIT index fund, a way to diversify the REITs that you have. Realty Income, another REIT. Disney, which is a streaming service now. So I realize that a lot of people consider them a brick and mortar business, but I really see them as a streaming service. We're up about 41% in them, and I really should put more money in them. I think that they're a really good company, but so far they have not appreciated as much as I would think. So I still think that they're a little bit undervalued for where they're at now, but only time will tell on that front. We have Skyworks Solution, which is a tech company that I really like. I don't have a ton of money in them, but I think that they will continue to go up. They pay a little bit of a dividend. We have NRZ, which is a mortgage REIT. So a pretty confusing business model, one that I don't know that I fully comprehend. They do pay a really nice dividend, and I bought them when they were almost at record lows. So far, they've returned a nice 21%, and that's not including their dividend, which I think they pay between 6 and 7% right now, which is really good. SPHD is a company that we're selling out of as I record this, and the reason is we're actually buying another company called Teladoc, which is my newest buy in this portfolio. I don't buy in this portfolio very often for the fact that I maxed it out early in the year, but it is a company that I'm really interested in. And I made a couple of videos on it before because one of the most well-known mutual fund companies in the world right now is buying a significant amount, about $100 million just last week. So if you guys want to see that video, I'll put it on the end screen. But we have Chase Bank, which is up about 23.6%. I really like them. We have an average cost of $93 right now. I am constantly buying Chase Bank. I have some of them in my other portfolios too, but I really like them. I really like the bank stocks in general, as you might be able to tell. And then we have Carnival Cruise Lines, which we have a pretty good cost basis. I mean, we could have timed it a little bit better because it went down to $8 or $9, but now it is at about $17, $18 a share, and it's very volatile. So it could be up significantly or down significantly from where we are now. So far, we have about a 44% gain in this portfolio. And, if you accounted for the fact that we transferred this in, it'd even be a little bit higher than that. And then we also have our dividend investing portfolio, which I do videos every week on this portfolio. We have a nice gain in this one too. This is the money weighted return of about 30%. The funding though, we have, or just the amount overall, we have a good return of about 14% in this portfolio. It holds a lot of the same companies. I think every single one in here is in that last portfolio that we talked about, but you can see overall this has been a portfolio that we've only had for 20 weeks, and we have a nice return in this one too. And then this is the last portfolio that I have. This is my WeBull portfolio, and I'll be honest, I transferred this over from Robinhood recently, so the returns aren't correct necessarily, so you're going to have to take my word for it. Workhorse, we have an average price not of $21.79, but of about $19. So again, it resets the cost basis when it transfers into this account. We also have Facebook, which we bought at a very low price, actually. I think this was around $200 also. So we have a nice cost basis on this one. We have 2 shares of this. We have Switchback Energy, which this has the correct average price. So we are up pretty significantly, about 20% in Switchback Energy. They are the company that's going to merge with ChargePoint. And this is a company that I've made a couple videos on, but I think this is kind of the future, especially with charging stations coming out, with Biden becoming the next president, most likely. Please don't comment on that in the comments below. I always hear people saying that he's not going to become the next president, or he is. So, just assuming that he is talking about the fact that he wants to increase the amount of chargers that we have out there. We also have Walt Disney, again, Disney stock, talked about that a second ago. Teladoc Health is another stock that I was just talking about that I am adding to my M1 finance portfolio. They are a tech stock that is in the health sector. They do appointments and doctor's appointments via the internet. So I'm excited about them. I'm buying about $400 in my other portfolio and then $180 worth in this portfolio. Then we have IIPR, which is that REIT that is growing very quickly. I'm not sure I actually talked about them earlier, but we are up a significant amount in this portfolio too. Then we have Virgin Galactic, which is SPCE, literally sending people into outer space. We're down a little bit on this position, I believe. Again, we transferred this in, so I'm not exactly sure what we're looking at. But overall, I feel good about this holding too. I'm excited to hold them because if they do a tenth of what they're expecting and what they want to do, it's a very high risk, high reward play, but I think that they can do really well. Qualcomm is that 5G chip maker that we talked about a second ago. We have NEO, which I don't hold enough of them, honestly. I bought some of them when they were $39 a share. I just own 2 shares. It is very sad. I really need to invest more in them and maybe trim down some other positions or just invest more overall. I kind of missed the boat on them. I was just dipping my toe in the water, so I always talk about this. I always invest a small amount, and then as I become more comfortable with the company, as I learn more about them, I buy more. I think that they're going to go up throughout the rest of the year, so I just did a video on their Q3 earnings, and I feel like they're going to do quite well. The thing is, though, I'm not investing a huge amount every week right now because I am saving up for the house, so it's kind of a pain because I don't have enough to invest. I want to invest thousands every month, but I am investing a little bit less than that. I want to invest like $4,000 or $5,000, which would be about half of my income at this point, but I have not been able to do that right now just because of that saving. And then we also have Foot Locker, and then Lordstown Motors, which I hold just a small amount of them too. I want to buy more of them. I feel like they are a company that has a lot of growth and ahead of them. So right now, if I'm looking at 3 stocks that I am considering buying, that are growth stocks, I am looking at Teladoc Health. I bought more of them just recently. I'm also looking at NEO. I'm also looking at Lordstown Motors. Those are 3 riskier plays, but I think that they do have some room to grow. Let me know your thoughts on this below. What could I be doing more of? Should I invest in cryptocurrency or something like that? Again, I think I am probably going to invest a little bit more in collectibles because it's only about 1 to 2% of my portfolio at this point, but it is a very interesting business. It's almost more like a business than it is an investment. I'm working with Logan again, so I think he's going to help me along the way with that. But let me know what you're investing in. What am I missing out in? Should I be including Bitcoin like I talked about? I am doing a video on them soon, so I don't know whether that will go up before this or this will go up before that. But be on the lookout for that. I'm going over my thoughts on Bitcoin and what the purposes are of Bitcoin. Thank you guys again for checking out the link down below to WeBull, where you can get 4 free stocks if you deposit $100. And then if you do want to see my video on Teladoc Health and why ARK is investing so much in the company, definitely check out this video here.